Venezuela, with nearly 300 billion barrels of proven oil reserves, is now widely regarded as the most oil-rich nation on the planet, putting Saudi Arabia into second place. The move up the rankings is the result of an important state-driven development begun in the early years of the 21st century. However, by 2016, oil production in Venezuela has plunged to a 13-year low. S&P Global Platts estimates that in June, the country delivered just 2.15 million barrels of crude oil per day. At its height, oil accounted for 96% of Venezuela's exports, and so the shrinking oil production only amplified an already grim financial and social situation. So what brought Venezuela to such a dire situation? Analysts long warned that Venezuela wasn't investing enough money into its oil industry, especially the maintenance of its oil fields and facilities. As long as prices were high, these issues could be masked. But with crude oil prices having plunged by more than half since 2014, the issues have now become critical. Because of the lack of fuel, the country now suffers regular power cuts. Additionally, Venezuela also has to deal with sky-high inflation caused by the country's plummeting currency. This has pushed costs up to a point where oil companies and suppliers can no longer turn a profit. The quality of Venezuelan oil is also a huge problem. The type of crude found there is very heavy and hard to refine, and Venezuela needs to blend its oil with lighter crude from countries like Nigeria and the US. An expensive task that has been made more difficult by payment issues caused by the financial situation. And the declines in production mean that crucial oil revenues will only shrink further. Venezuela has now found itself in the eye of a perfect storm.